Today in this video, we're going to do an Ask the Underwriter question. Which one is more important, my credit score or my payment history? Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in Nashville, Tennessee, and my firm is Southern Living Realty Partners. Okay, I am going to answer these questions that I get asked quite often from you all. I had a young lady who told me that she had been diligent about paying her credit cards because she knows that the revolving credit, your utilization on your revolving credit, which is your credit cards, your store cards, your gas cards, contribute the most to your credit score. And so she had been paying those diligently. I don't know if she was paying extra or what, if she was just making the minimum payment. It doesn't matter. She was making her payments diligently. She applied for a mortgage and got turned down. Not because of the credit score. Her credit score was excellent. Listen, I have told y'all in previous videos, there are a lot of verifications that go on when you apply for a mortgage. Okay. First thing is, the credit scoring model already gives you a certain score based on your length of history that you have of paying your bills, how much utilization, all that good stuff. Okay. So that's one verification. We verify your credit score and your payment history. But where this young lady got tripped up at was on her rent. She never was really 30 days late, but she paid her rent late and had, late fees, quite a few late fees. She had never went 30 days late. I want to emphasize that. But listen, in her mind, she never went 30 days late. Okay. When you apply for a mortgage, whether you're living at, you're renting from a corporation, you're renting from an apartment complex, a management company, something, we go get a verification of rent. We get a VOR as an underwriter. We get a VOR on everybody. So we want to know, how are you paying your rent now? So because she would normally pay, like if it's due on the 1st, late after the 5th, she was paying it on like the 15th when she got paid in the middle of the month. So the management company is marking her late and they're requiring her to pay the late fee. So when it got to the, we asked for that verification of rent, they sent it in. They like, yeah, she's late. She's been late like 9 times out of 12 in the past 12 months. Again, to her, she's like, well, I was never 30 days late. I just suck it up, pay the late fee. It's not going to work. That right there is not going to work. When you're trying to get a mortgage, you need to know that it's twofold. There's a matrix that we go by, and that is what is written into the mortgage underwriting system. Okay. The first thing it does, it looks at, yes, it do. First thing is, do you have the minimum required credit score? Do you have a 660? Do you have a 680? Do you have a 720? Do you have whatever? Okay. And again, remember that on a lot of your true government loans, which would be an FHA, a VA, a USDA, really, if you're going just by the guidelines of those federal programs, there is no minimum credit score. The minimum credit score comes in from the lender, the person, the company that is actually lending you the money. They have certain criteria, right? So that's where, because remember, the government, the federal government does not lend money to you. They don't lend money to you. On an FHA loan, they issue a guarantee to the lender, to the person or the company actually lending you the money, that, if Rhonda defaults on this loan right here, we're going to pay you 85% of that loan, or 90%, or whatever the percentage is. So just remember, just because the guidelines say there's no minimum credit score, like an FHA, like a VA, like on USDA, there is no minimum credit score. But you have to remember that the lender, the person, the company that's lending you the money, they have requirements. Okay. So even when the guidelines say, let's say for instance, that you got to have a 620 minimum score, or we can do a manual underwrite if you're lower than that, or if you have no score at all, meaning you don't have any established credit. There's somebody else that's got to say so in that, the lender. Okay. So let's say your file is being manually underwritten because you don't reach that score criteria, or what has happened is the underwriting computer has kicked it out as a refer. It's a referral. They want a real human to look at it because they're like, there's a lot of stuff going on with this. This is not cut and dried. The computer can't say for certain whether this is a good loan or a bad loan. It can't say, excuse me, whether to approve you or disapprove you. So it's a refer. That means that's a manual underwrite that's sent to an underwriter, an actual person to look at it. Okay. So the first thing normally on the matrix is the credit score. So this young lady was correct in making sure that her credit score was up there in order to be able to, get a mortgage. But the number 2 thing on all of these loans, I can't stress this enough to y'all, is you have to be 0 times 30 on your rental payment or your existing mortgage if you're trying to get another house, or your previous mortgage if you're trying to buy another house or whatever. So you need to be cognizant of how your payment history will be reported. Even though you've never been you are 0 times 30. You've never been 30 days late. You paying late will have a definite detriment to you. And in this case, she was very close. She was already like just skirting by. You know what I'm saying? Like her DTI was high. She didn't have that much in reserves, the money left over after you close. She didn't have a lot of good factors. She had been on her job only like a year. And her previous job was not in this same field. What I'm trying to get y'all to understand is when you close like this to getting approved or not, you need to have other compensating factors that will supersede what's going on. So like I would look at it like this. If they're reporting her 0 times 30, but they're saying she's late, right? She's been late every month. Okay. You could look at it and be like, okay, it really is 0 times 30 because she's not going 30 days late. She's probably 15 days late. Okay. But when you do not have any other compensating factors, you ain't going to have a dollar to your name once this thing closes. You have no reserves. You've job hopped. You was 3 months here. You was 6 months here. You in different fields. You're going back and forth as far as your work history is concerned. And you're probably getting down payment assistance. So your amount of skin in the game is limited. And then when a person has to look at your file and say, they've been late 9 times out of 12, you're more than likely going to get a denial. The 2 things, in my opinion, as an underwriter, that you need to be making sure that you're up on is make sure that you pay your rent or your mortgage, your previous rent, your previous mortgage, your current rent, your current mortgage. Make sure you pay that on time. Because we will go get a verification of rent, and they put it all out there. Because the verification of rent asks very simple questions. It asks very specific questions. It'll say, how many times have they been late? How many times have you had to charge them a late fee? Have they paid their late fees? Are they in arrears any amount? And that's the key. You could be caught up on your rent, but you could have late fees and arrears that are due. That's going to kick you out. What I want y'all to understand is the 2 things to me that you need to concentrate on are the credit score and make sure you pay your rent on time. If that means that you're just making the minimum payment on that revolving debt, if that means you're just making the minimum payment on your installment debt, you're making the minimum payment on your student loans, you're making the minimum payment, but you're making that payment. It's much easier for us to approve you making the minimum payment on your debts and paying your rent on time. It's just much easier, especially when you don't have these other compensating factors that I mentioned. Again, my name is Rhonda Burgess, and I am a mortgage underwriter and real estate broker here in the Nashville, Tennessee area. If this video has helped you, given you some valuable information, please give it a thumbs up and consider subscribing to the channel. Thank you, and as always, have a blessed day.